Welcome everyone. In light of having to postpone our in-person ILS NYC conference to April the 22nd because of the pandemic, we thought we'd run some interviews with our kind sponsors of the event so that we can showcase their thought leadership and also to thank them for their support. So tickets are still available for the conference in April. Please do visit the Artemis website and you can secure your place at the event today. So for this virtual event video, I'm delighted to welcome speakers from one of our gold sponsors for the conference, AXIS Capital. So today we have Haugh, President of Global Property Reinsurance. We have Katie Partington, Chief Underwriting Officer of Reinsurance, and also Chris Caponigro, Global Head of AXIS ILS. Welcome all of you. It's lovely to see you.
Nice to be here.
So, as ever, we're looking at the development of the insurance-linked securities market with one eye to the future, as is the way with all of our events at Artemis. And AXIS Capital has been leveraging third-party capital within its underwriting business for over a decade. And the unit dealing with this at the company was rebranded as AXIS ILS last year, and you've been staffing up ever since, suggesting a growing focus perhaps there. So it's good to talk with you all and be able to find out a little bit more about the plans at AXIS. So perhaps to begin, we can start with you, Chris. Now, you've been focused on the insurance-linked securities space for a while now, and you joined AXIS to lead ILS at the company last year. So maybe you can give us a brief overview of the AXIS ILS offering and also explain why you feel the company offers an attractive platform for investors to engage with.
Sure, and thank you, Steve, for having me today and my esteemed colleagues here. You know when I joined AXIS back in July, what really attracted me to this company is that it had a very large range of offerings through their ILS platform. Everything from the North Shore cat bonds, property cat quota shares, even out to longer tail with our Harrington structure, and many vehicles in between. Now, what really was exemplified there was that first and foremost, AXIS is an underwriting company, and then from that base, we're willing to share with both, private investors, to complement the public capital investors that are currently on the platform. So what really, is so unique here is that, the level of transparency and willingness to build structures and to bring underwriting capacity to the organization in a very capital efficient way for investors.
Yeah, and you said capital efficiency, keywords there for any company using third-party capital. And perhaps, Anne, you're leading global property reinsurance at AXIS Capital, and obviously your team has a deep reach into the sources of risk that you share with investors and that investors would find attractive. And your strategy of late has been to keep a little less catastrophe risk for your own balance sheet. You've been through a process of sort of pruning that down and I guess defining where risks are going to sit. But what's your vision for the use of third-party capital within the property reinsurance segment at AXIS, and how do you see that evolving?
Sure. Yes, you're correct. Our strategy has been to use third-party capital to build our portfolio. So we certainly expect to continue to grow these relationships, and we'll keep doing so as it fits alongside our long-term business objectives. As we saw from the recent January 1 renewals, the demand for property reinsurance is quite strong, in part due to increased frequency and severity, last year being one of the last 5, with that being an underpinning element, but also due to factors like climate change, rise in secondary perils, social inflation, increased values due to urbanization, many things driving that demand. And that, of course, then creates the need for more coverage. So by design, we can only grow our capital so fast, but we can manage risk for a lot of people. So by increasing our capital sources, of course, then we're able to deploy more capital that is ultimately needed in the market. We source our capital by working obviously very collaboratively as a team with Katie and Chris's team, but also working with dependable, stable, and diversified capital partners, exactly the same way we would think about building a reinsurance panel, where partnership and alignment are critical. So it's important to say as well, I think, that we're a gross underwriting operation, and we don't make a distinction between ILS capital or our own.
Yeah, and that's obviously important. Investors are very keen to hear the alignment of interest that you guys must have then. So Katie, maybe moving over to you, you could provide us a little bit of insight into how risk selection is undertaken at AXIS and how you decide what might be an attractive risk or portfolio of risk to share some of the economics of with ILS investors.
Sure, no problem. So at AXIS, we start all the way at the bottom at looking at the individual risk selection and really trying to pick high quality risks. And then we look at how that fits in with an overall portfolio. So we're looking at things like return on capital, volatility of result. We'll also challenge outliers as well, have a really deep look at pricing. And we really look at qualitative as well as quantitative factors in portfolio building. So we'll definitely look at the numbers, but we also try to challenge and look at other factors in how we build the portfolio. So, the longevity of the risk, where we think we are in the market, where we think we are in the cycle. And we really look at those things when we're looking at building portfolios. I think it's important to note that really all of our portfolios have the potential to be shared with investors. So, and we actually have done work across several different portfolios to look at investor appetite. It's not just been in property and cat. And it really, is up to the investor to kind of tell us how they really see the market, what they're looking for in sort of return profiles. Again, not just quantitative, but qualitative, and we can see what's of interest to them. And so we're very open to having those conversations.
Yeah, no, it's interesting to hear that you're adopting a sort of a dynamic approach to this. It seems looking at the cycle and how the industry is responding at any one point in time, and I guess that's probably becoming something you have to do increasingly frequently, given capital seems to be far more fungible in reinsurance these days. Chris. Yeah. Moving back to you, what's your view on where sort of ILS investor capital flows will move through 2022? I mean, it's been another challenging year of catastrophes, and there's obviously been a lot of news around redemptions and capital being trapped again. But what's your outlook, and where do you see the opportunities?
Yeah, thanks, Steve. So I think that in 2022, you'll continue to see many investors a little bit unhappy with being, trapped with the collateral on more of the high risk, high reward type strategies that maybe they embarked upon. So I think you'll see less capital coming into those areas, which will continue to have a void for more of the frequency layers in the reinsurance area. Or reinsurance tranching. Now, when you think about where investor capital is coming in, it's coming in more towards more liquid offerings, the cat bonds, more remote risk strategies. That's where people have shifted some of their appetite, at least currently, as they're in this holding pattern. And I say it's a holding pattern. I think there's a lot of interest on the sidelines still from investors, pensions, sovereigns, et cetera, that really do want to consider this as a non-correlated asset strategy, but they want to make sure first that the industry is getting the cost of goods sold right? Everything you hear from, all types of inflations, the climate change and all other types of variables out there with surges for demand and product. At the end of the day, people are very concerned about what the ultimate cost of these goods sold are. And they just want to make sure that our modeling, our underwriting expertise as an industry has adapted to these changes and is reflecting an appropriate amount of margin above that for investors to be in this class long term. Once we start demonstrating that, and 2022 could be a good year where, depending on how losses do play out, we could still, as an industry, with the given rate rises, show that there's money to be made in the property. Now, when you look at other classes of business, there's a lot of dialogue and a lot of interest, whether it's specialty lines, but even more importantly, the casualty lines of business, there's even more greater interest. So, platforms like AXIS, where we have a very efficient way to package risk, and we can also leverage our balance sheet, we have ways of packaging even the longer tail lines for the investors to be able to bring them more into the fray. So, I'd say right now, when you look at it, property is going to be still challenged. Other lines will have an opportunity to rise above the fray for more interest.
Yes, and that could get really interesting, I think, this year with the increased focus on those lines. And that's certainly an opportunity for a company like AXIS to demonstrate how the platform you've created can help investors access a differentiated source of return as well. And Chris has just spoken about sort of investor interest still being strong, but obviously some challenges that have been faced, and then the real importance of demonstrating the pricing and the modeling is accurate. So what's your expectation for the important US renewals this year at the middle of the year? Do you think the firming is going to continue?
Well, I certainly hope so. It's hard to say. Obviously, we're just tying up our 1/1s, but if the recent reinsurance renewal period is an indication, I would say rates are moving in the right direction. It was a very late renewal with evident disruption, and we actually felt the market got harder as we got closer to January 1. Clearly, we saw the impact of tightening capacity in the outwards retro market for aggregate deals, and obviously due to some of that trapped capital that's been referenced. If I speak specifically to global property, one thing we did notice that pricing was really not uniform across the portfolio at the renewal. Lower layers of the reinsurance towers and aggregate treaties where supply was much more constrained. We really saw that's really where we saw the strongest price increases. But as you moved up the towers to layers further from severity and frequency, where there clearly was more interest and supply, rate increases were certainly more subdued. And it also played a role where loss impacted accounts. So you definitely saw in the market commentary, a lot more double-digit rate increases in areas impacted by storms in the US, Hurricane Ida, the burnt floods, et cetera. So, all in a positive direction. The question will be sustainability. We did also see, which I think is a good barometer, changes in structures and increases in program retentions. So for us, that does give us hope that the rate environment and the market environment will continue to move upward, and that the gap between the current view of risk and rate adequacy will continue to close. I think it's absolutely critical for reinsurers to be able to achieve an adequate return for the risk and volatility that we assume.
Yes, you make a very good point there about the structures and I guess the terms and conditions continue to improve for renewal business, and that's as important as pure rate, which we're often guilty, obviously, of focusing on the percentage increases, but it's the business, the way it's underwritten that obviously defines how profitable it's going to be. Katie, turning to you, Chris referenced a few sort of different opportunities that he sees for ILS investors to potentially work with AXIS. Now, from your sort of vantage point on the underwriting side, and you write business at AXIS across both reinsurance and insurance, obviously, but do you foresee opportunities to work with investors in other areas of the business outside of the property and catastrophe that we're most familiar with?
Yeah, absolutely. I think, that's really something that we welcome here at AXIS. And as Chris referenced, and so did I, it's an area where we've definitely already explored, with investors. I think, looking at a company like AXIS, we've selected a certain portfolio for, our publicly traded company, but we definitely have expertise in areas where, we may want to explore further investor support. And I think that's a really important point that can help us, access business for investors that maybe might not be something we choose for our overall public portfolio. And I think this is a real opportunity for investors. I mean, Anne and Chris would know as well. I think one of the things I see as a really big asset at AXIS, even though I'm, sitting here from the reinsurance side, is really how much of a connection we have with the insurance side. We spend a lot of time, and you see Chris and Ann nodding here, we spend a lot of time at AXIS talking about, the opportunities in certain lines of business and weighing the opportunities between the two distribution channels, insurance and reinsurance. I think, we have a really unique position here to bring to investors to talk about accessing that risk versus insurance or reinsurance. And one specific example, I think, is cyber. We have a very strong footprint in cyber in the insurance space at AXIS. We've built up a lot of expertise there, seen as a market leader. Cyber has got, I think, the real opportunity to have more investor appetite, more investor capital allocated to it. It's been a tight space. It's a changing space. And it's also a space, which is relatively short tail as well. I think this would be a great area for investors to continue to explore. Also, I think, emerging market, emerging risk, I'm really looking at climate risks as well, where maybe we could find some investors who have different time horizons than the usual publicly traded investors of some of the companies that might be willing to explore putting capital behind different solutions, or even putting capital behind solutions combined with risk mitigation. I think this could be a really interesting space for investors to explore. So I definitely think there's more to unpack than just the property space.
Yeah, that's very interesting. The risk mitigation side of things combined with an investment, because that really plays in nicely to the ESG angle as well, which is so popular today with investors around the world. So finally, Chris, just moving back to you, you're leading the AXIS ILS sort of mission today, but what's your vision for the AXIS ILS platform over the next few years? Where would you like to be, say, by 2025?
Yeah, Steve, I think following on from what Katie was saying, AXIS is a hybrid model, insurance, reinsurance. We have nearly $8 billion of revenue that we're bringing into our current franchise today, and have opportunity to continue to expand that footprint with more capacity from more investors, the private investors. So we're actively finding ways to build those partnerships that make sense, right? We're not going, first and foremost, we're an underwriting shop. We're going to make sure that the risks make sense for us or for our partners, so we could be the clearinghouse there. And we'll continue to expand the footprint on the growth side when the investors also see eye to eye with us on how we want to underwrite and build those portfolios for them. Now, as Katie mentioned, we're going to put a lot of work into R&D here, in structures that are going to be scalable and simple. We don't want things that are complex and aren't easy to replicate again for another investor. We need to have scale, and we need to have it simple so we could bring more capital in. And some of those areas, not dissimilar from, like, say, property, cyber, as Katie mentioned, is certainly an area that's ripe, that's going to need and consume a lot of capital in time. And I say consume capital, I don't mean from losses, but I mean from supporting the risk that's going to be in the market. There's going to be an insatiable amount of demand. We're already seeing it now at euphoric terms in the market. So the more we can do from our side here at AXIS to build capital efficient structures for private investors to be able to put their money to work in that space, whether it's insurance or reinsurance, we're happy to do so. We will be doing so. And we're putting a lot of effort into the systems and methods of which investors can depend on us to be able to be transparent and manage their money well. So very excited about the next 3 years that we have here on platform. We have many initiatives in place, and really excited about being very a very big part of the third-party capital going forward in this space coming from AXIS.
Great, thank you, Chris. Yeah, that's really good to hear that you're going to take a sort of exploratory and research-driven approach to trying to help the ILS market essentially expand. And I think it's got to come through companies like AXIS that have got a deep reach into global underwriting marketplaces. So look, I'd like to thank you all very much for participating today. Thank you, Chris. Thank you, Anne, and thank you, Katie, as well. To everybody watching, you will be able to view all of our videos on the website. And as I said at the start, you can still book your tickets for the event. So thank you again, Chris, Anne, and Katie, and thank you to AXIS Capital for the support for the event. It was great to talk with you today.
Thank you, Steve.
Thanks so much.
Thank you, Steve.